Alright guys, we are looking at the Judas Swing, and this is probably one of the events that many of you, if you've been trading in any time, like, you've been a victim of this. But before we get into what a Judas Swing is, the reason why I named it the Judas Swing, and this is predominantly, a self-plug, I know, but I will allow my ego to reveal a little bit of itself here. The reason why I named it the Judas Swing is because when I was noticing this phenomenon, it really resonated with me and made me think of the Judas goat. And a lot of you guys have been emailing me and asking me, what is a Judas goat? And well, typically, when farmers and cattlers and those who raise livestock years ago, they would use what was called a Judas goat. And what it is, it's a trained goat, and it's used at slaughterhouses. And basically, it's used in general animal herding. The Judas goat is specifically trained to associate with sheep or cattle, but its job really is not to coexist, but it's designed to destroy by leading those following it to a specific destination. In stockyards, a Judas goat would lead sheep to slaughter, while its own life is spared. So what is a Judas swing? Well, a Judas swing is an engineered or suspect price swing meant to lead reactionary traders into the wrong direction. The Judas swing typically is a false rally higher that appears initially to the emotional traders as the next big price run. Now, this could be a quick or sudden price drop that will lull reactionary traders into thinking this is the next big drop in price, and so they start going short. But in the markets, traders that follow this Judas swing find themselves trapped on the wrong side and ultimately pay the price. Think about it. What happens when the Judas goat leads these sheep into the slaughterhouse? It's not a picnic and they're waiting for them. They're going to get slaughtered. They put their heads on the block and their head comes off. That's what happens with traders. So, how does this entity called quote unquote smart money goat you into this trade? Well, here's 3 examples. Notice how the Asian range is denoted on these 3 days. Notice here on the left side, price breaks up out of the Asian range, gets everyone excited, thinking, wow, this is going to run up. What's it do? It falters, stalls, pauses, then retraces harshly. That is the Judas swing. That swing going up made everyone get excited. They got really interested in saying, well, there's a bull flag here. This is probably going to be a 1, 2, 3 bottom, and then it's going to continue to trade up for a few days. And that's exactly what the smart money or bank dealers are expecting you to do. That's why they send it up there so rapidly. And what happens is you take the bait. You follow that Judas right into the slaughterhouse. Price makes its high, trades down into a low of the day, and then pulls back to the center of the range. The second day, example is shown here as well. You have actually two Judas swings in here, and one was a economic report that came out. Price breaks up out of the Asian range, again getting everyone excited about taking longs, and then it pull it back below the Asian range. One more time, they send it up above the previous high that was made outside of the Asian range, and then what do? They slam it down. That's the raid on the stops for those that got short on the initial break above it. Trades down precipitously and then pulls back off the lows into the close. The third example, you can see here the Asian range, there was a dramatic slide down in price out of the Asian range, getting everyone excited, thinking it's going to be a short. Notice that this price decline was just enough to get below, wouldn't you know it, the stops on the previous day. There's folks that are looking to trade short based on selling on stops and limits, and the market makers are going to take the price to those levels, take out the pending orders, trigger them, and then once you're in the move and you're trapped, they send it the other way very, very quickly. They're not going to wait around for you. Once they get the money on the other side of the market that they've positioned for, in other words, in this third example, this is going to be a buy day. The Judas swing is going to be a down swing, sucking short sellers into the market. Why? Why would they want to take it down there? Number one, they're going to send it down there so you guys are going to buy it. Hook, line, and sinker. You're going to say this chart on a 5-minute or 1-minute chart. And what's going to happen? You're going to see what looks like Armageddon because you're so zoomed in on your charts. You start going short. So if you're selling it, who's going to take the other side of that trade? The dealers. So they're going to give you the other side of that trade. You want to sell it? No problem. They'll buy it from you. And then they surge it completely vertically up, and then all of a sudden, what do? You have to admit that you've been crushed. And this can go on several days. And if you understand how this phenomenon takes place, when to look for it, when to anticipate it, it's very profitable. You don't have to be reacting to the price swings. There's a systematic way of looking at the market, and we can formulate a game plan on how to use this price swing. But it has to come with the understanding of how to determine what the high probability for the directional trend of the day is going to be going into the market. You have to have this mindset before you start looking for the swing. Otherwise, it'll fake yourself out. So when does it typically form? Well, a Judas swing essentially is a stop raid move that surges in one direction and many times trades right into a key support resistance level. Now this could be a key support resistance level on the 1 hour, the 4 hour, the daily, even the weekly and monthly. It could trade right into a previous high or low. Typically though, you'll find it being a counter swing into a larger swing to form an optimal trade entry pattern. It can typically find itself materializing as a raid of the previous week's high, or conversely, it could be a raid on the previous week's low. But generally, think in terms of it being any stop raid on any previous session. So in other words, if we're trading London, look for Asia's stops to be rated. If you're trading in Asia, look for New York's stops to be rated. If you're in New York, look for London Open's stops to be rated. If you see this price action unfolding with your directional premise in mind, all you have to do is sit on your hands and wait.